The Union Budget 2025 is finally here, and as investors, it's crucial to understand what's in it for us. From infrastructure growth to tax incentives, this budget paves the way for significant investment opportunities. Let's take a deep dive into the key highlights and how they impact your investment strategy. Let's start with one of the biggest announcements, an allocation of 11.21 trillion rupees for capital expenditure. That's a 10% increase from last year. This boost in infrastructure spending is set to benefit industries like steel, aluminium, and construction. Additionally, the push for public-private partnerships will further accelerate housing and power infrastructure projects. So what does this mean for investors? Well, infrastructure-focused stocks, mutual funds, and REITs could see a strong upside. If you're a long-term investor, this might be the right time to explore opportunities in infrastructure-linked sectors. Next up is manufacturing. The government is strengthening its Make in India initiative by expanding the production-linked incentives scheme across electronics, auto components, and semiconductors. Plus, there are new tax breaks and subsidies for electric vehicle manufacturers and buyers. Sectoral mutual funds focusing on industrial manufacturing and EV technology could stand to benefit, and it's important to keep an eye on companies benefiting from these incentives. Now let's talk finance. This year's budget brings major reforms for the banking and financial services sector. The most notable change, the foreign direct investment limit in the insurance sector has been raised from 74% to 100%, which will attract more global players and enhance sectoral growth. For investors, this is an opportunity to focus on banking and insurance stocks. Sustainability is another major focus of this budget. The government has launched the nuclear energy mission, targeting 100 gigawatt capacity by 2047. There's also a 20,000 crore push for research into small modular reactors. Plus, the removal of custom duties on critical minerals will help accelerate EV and battery production. This can be seen as positive news for investors looking for long-term sustainable growth through renewable energy stocks and ESG mutual funds. Additionally, the increasing issuance of green bonds presents another compelling investment avenue. Now here's something that directly affects consumers and investors alike: income tax cuts. With the tax exemption limit raised to 12 lakhs, people will have more disposable income. This is expected to drive higher spending, which means a boost for the FMCG sector. If you're into stock investing, FMCG and consumer discretionary stocks could perform well. Mutual fund investors might want to consider consumer-focused portfolios or retail-based REITs. Looking at the broader market, sectors like infrastructure, banking, and EVs are well positioned for growth. However, we should also be mindful of fiscal deficit concerns, which might cause short-term market fluctuations. A diversified approach is the best way forward. For debt market investors, the government has projected a fiscal deficit of 4.4% of the GDP. This signals fiscal consolidation, meaning bond markets could remain stable. For mutual fund investors, large cap funds remain a stable choice, while mid and small cap funds may see strong growth in sectors benefiting from government policies. So there you have it. The Union Budget 2025 presents several exciting opportunities for investors. By aligning your portfolio with key focus areas and staying updated on market trends, you can make the most of these opportunities. If you found this breakdown helpful, don't forget to like, share, and subscribe for more market insights. See you in the next video, and happy investing!
Investment in securities market are subject to market risk. Read all the related documents carefully before investing. For more information, visit kuvera.in.